Good morning and welcome to another Blain's Morning Porridge. It's October the 6th, 2025. Today, let's talk about a bear in a bull market. As always, let me start with a quote. Markets are not clever, they simply reflect the weighted stupidity of participants. Now, that's one of my own quotes from my famous list of market mantras. But what's not to like about markets which only seem to be going up? Lots of market participants are increasingly certain that the current upside momentum is absolutely unstoppable. That's a problem for those of us who suffer from the problem of thinking too much. We're wondering if it's sustainable. Being a bear in a bull market can feel very, very lonely. So, welcome to a new week playing the game of global financial markets. What's not to like, ask some? Well, in my mind, there's lots. And one of the things I got accused of last week was Trump derangement syndrome, something that seems to affect too many people in this market, or so I'm told, finding excuses to blame Donald Trump for everything. Well, I try not to make any judgments about Donald Trump. The Americans elected him, he should be their problem. Unfortunately, probably not. Anyway, let me just tell you how I see it. After all, that's why people subscribe to the Morning Porridge. And how I see it now worries me. The US government is now locked in a shutdown. Yet the euphoric stock market is rising to new highs every day. It would appear that the administration in the US is using the shutdown, as an opportunity to cut its wage bills. Vivek Ramaswamy, who you may remember was the short-lived former co-head of DOGE, the Department of Government Efficiency, alongside Elon Musk, says that they should simply sack everyone who works for the government and then hire back later the ones that they find they need. Whatever. Meanwhile, while the markets and stocks are at record level, gold has quietly been hitting a new record high as well. And gold is always the risk indicator. And I'm listening to gold much more than I'm listening to US stocks. I always say that in bonds there is truth, in gold there is prophecy. These markets feel like the Red Queen's proverbial 6 impossible things before breakfast. And I've long struggled with the rhyme of what the market is prepared to believe versus the reason and common sense. When my disbelief reaches worrying levels, as it is today, I try and calm myself with another of my mantras. Trading is about the short-term mood and sentiment of the market, which is not clever or omnipotent. Investment, in contrast, is all about long-term common sense. And it's that gap between reasoned investments and short-term trading fantasies that's never really felt wider than it feels today. Yet the market still seems determined to keep pushing higher. Let me go through a few examples with you this morning, and let's start with simple economics and markets. If I was to state the trading case, it simply says that following the Liberation Day back in April when Trump announced the tariffs, back then, every single strategist and economist warned of the likely effects on growth and recession, possibly triggering stagflation, the dreaded combination of a recession together with rising inflation. Today, however, the US economy looks strong and resilient, and economists, including myself, are being pilloried for getting it wrong. The economy appears buoyant, it's absorbed the tariffs, and the debt of the USA is falling as a result of tariff incomes. According to the trading sentiment, it's no surprise stock markets remain strong and rising as the promised collapse that would have triggered a consumption tumble and recession hasn't happened, and interest rates are set to fall, therefore you should buy stocks. Now, the investment case is very different. That's when people try and predict what the consequences are going to be, and the tariff effects and the unforeseen consequences still to impact the economy are only likely to happen slowly. they're still going to impact the economic numbers. And we've got to remember that these numbers are now hidden by the government shutdown. On their own, tariffs may be limited if price increases are one-off, and retailers selling to the consumers are going to hike prices gradually while absorbing some of the costs. But if you combine the inflationary effect from tariffs with lower interest rates and redirected supply chains, then there's a strong likelihood that inflation will rise. And that's going to put further rate cuts on hold. Now, my conclusion there is we just don't know yet what the effects of tariffs on the economy, the global economy, are going to be. Then let's take a quick look at economic data. Now, the trading case is that for decades, nobody trusted Chinese economic reports. The only way you could really understand what was going on in China was to go and visit, and you had to get away from the modern Potemkin business centres that they've built all over China, and then go and visit all the new towns where tumbleweed blows down the streets, where there are zero people, no businesses, shops and empty factories. Last Friday, the US failed to publish the September non-farm payrolls report, one of the most eagerly awaited reports every month because it tells you about US employment. Now, it was expected to be negative, carrying on a series of weak numbers we've seen all year. But what traders are claiming is that the strength of the US economy is not hidden. Airlines, hotels, restaurants and shops all report solid consumer spending, that there are few signs of any slowdown in the economy. Therefore, the fall-off in employment must be due to other factors, like the clampdown on immigrants. Now, if you're an investor, you're going to be very suspicious of that. We are not going to see any of the critical data that investors rely upon while the government remains closed. We'll be dependent on rumours and somebody says type stories to get our information on how the economy is doing. Now, what should we think of the US economy when we don't get the data, bearing in mind that Trump's government is determined to feed us a stream of positive vibes about how well it's doing under Trump? Now, the US is certainly a more open and transparent economy than China, but who is looking versus who is simply listening to what the administration would like us to hear? And it has to be remembered that retail investors, who tend to be more susceptible to what they want to hear, play a very outsized role in the direction of the US stock markets. My conclusion there is, without clear economic data and a market moving on unverified but apparently plausible data and reports, there is a serious risk that the next crisis, whether that's recession, which I think is unlikely, or inflation, which I think is very likely, or a breakdown in consumer consumption, which I think is possible and probably underway, will go unspotted in terms of consumer defaults or credit spreads missing a turning point. Another thing I want to look at is the AI bubble. Now, the trading case there is something I've talked about before in the morning porridge, and the front pages are all about how much the hyperscalers are spending on AI infrastructure and how quickly it can be built. They say it's driving an economic boom in the US. And we all know, of course, that AI is set to change the world, vastly increasing corporate earnings, the productivity of businesses, and creating value across the whole chain of the economy as infrastructure builders build everything from chips to reactors. However, the investment case is not so positive. We've got an increasing number of analysts who are now fretful about how AI companies are going to monetize themselves. And what can AI-based firms realistically expect to make versus the froth about how much it's going to change the world? And then if you remember last week's morning porridge about AI, I was writing about open weight AI models as opposed to the current closed weight hyperscalers, which will prove much cheaper and offer users critical data sovereignty. My conclusion there is that spending trillions to make millions is not going to justify the current multiples and expectations of the AI market. Most vulnerable companies will include names like Nvidia, currently valued at $4.5 trillion, if it turns out that open source and open weight AI is better and can use cheaper, plentiful chips. Let's then turn to crypto, another example of where I think that the trading case and the investment case are out of sync. Now, in the trading case, we've got a new buzzword in the crypto markets, which is the debasement trade, that fiat currencies are in crisis due to government debt and political instability. And I had cited to me this morning the fact that Japan is likely to end up with a female prime minister as likely to create further problems. I don't see why, but that's what the market thinks. And the crypto shills, of course, tell us that Bitcoin offers salvation from the gathering storm that will accompany the collapse of debt in the Western world. Now, they point to multiple ways that you can now invest in crypto. You can go through direct crypto wallets, you can hold them on exchanges, you can buy them in the form of exchange-traded funds, you can buy stable coins, and then, of course, there are Bitcoin treasury firms, which all make the market much more accessible for everyone to participate in the wonders that is crypto and Bitcoin. And in addition to that, you've also got political support from the Trump government, making it even more secure. What's not to like about it? More and more investors are adopting Bitcoin, so we are told, therefore prices are only going to go higher. I'm always told whenever I question the value of Bitcoin that if everybody was to hold just 1% of Bitcoin in their portfolio, then the price will go to $1 million, apparently. Now, the investment case, in other words, what maybe smarter thinking people are asking about crypto, is there's nothing wrong with asking questions about the why of crypto. Why is it that Bitcoin exists? What does it actually do or enable that money and gold doesn't already do? Isn't Bitcoin just angry libertarian lashback at how governments and central banks control money? And as for stablecoins, well, they're not actually crypto. All that stablecoins are is a tool to transact. They're not money, they're just tokens directly linked to an underlying fiat currency. They don't pay interest, but you can use them to transact without having to go through all the normal problems of going through a bank. All the interest that is paid on the treasuries or other bonds that back stablecoins goes to the sponsor, which is why firms like Trump's Liberty Global are so keen that you use them. And as for Bitcoin treasury firms, well, they are just leverage bets on crypto, which will collapse faster in a downturn in Bitcoin prices. My conclusion on crypto is you can believe whatever you want to believe and good luck with it. I trade crypto, but I certainly would not invest in it. I question everything I hear about crypto. It depends on finding the next greater fool, and that's driven more by the marketing and stories about rising adoption feeding fear of missing out. Now, if you don't ask questions about investments, more fool you when it inevitably happens. And finally, let's look at Tesla. Now, there are multiple stories I could tell about crazy corporate stock prices that make little sense, but Tesla is a good example and the obvious one to talk about. Now, the trading case for Tesla is that the stock is almost up to its year high, almost back up to record levels again. And I'm told that's because it's just had a record quarter selling cars into California. CEO Elon Musk is out there buying stock in his own company, spending $1 billion to buy Tesla stock. The robo-taxi is apparently going to dominate the globe. Tesla is close to cracking AI and robotics. and the commercial battery business is thriving. And Kathy Woods says that Musk is the most important inventor in human history. Now, the investment case is a little more skeptical. We know for a fact that the California sales were a one-off before the subsidies that Biden enacted are closed by Trump. Tesla was once the leading firm in the electric vehicle market. Now it's falling behind because that sector has become increasingly competitive. And let's face it, Elon Musk is a man distracted by many other companies that he runs. And there are rising doubts about the delivery of new products and how he keeps falling behind. Now, one thing I'd recommend everybody reads is a new book, The Tesla Files, which is about how German newspaper Handelsblatt was passed data by a whistleblower right out of the Tesla computers. And all this data was very poorly protected. It exposes multiple failures in Tesla's safety record on the cars, its toxic culture towards employee, and how Musk thinks he's immune from the normal process of law and stock regulations. It's a great read. I seriously recommend it. I read the whole thing on a rainy Saturday afternoon. If we move on though and try and reach a conclusion on Tesla, I simply can't understand why it is valued so highly. Yes, they make good cars, but not enough to justify the current valuations, especially in light of all the problems that are coming to light. Now, either I'm missing something fundamental, or lots of people invested in the stock are deliberately choosing to ignore the evidence that's increasingly in front of them. Now, I could go on and find lots more reasons to worry about the market's ability to fool itself, which is what I think is going on at the moment. But this is a trading market, and you don't listen to common sense in a trade-driven market. What you listen to is what the market wishes to believe, its underlying sentiment. Now, I'm going to make the decision to keep my investment powder dry for the time being. To be brutally frank about it, my biggest position is currently gold. I'm waiting for the opportunity to step back into the market. Anyway, thank you very much for listening this morning. As always, I'll be back with another morning porridge probably tomorrow. And in the meantime, if you want to receive the porridge every morning, you can subscribe on www.morningporridge.com, or you can simply watch this YouTube channel. Thank you very much for your time.